Hey, what's up, everybody? This is Brian and Benjamin Tercetto, and we are local brothers and realtors here in the beautiful Santa Fe, New Mexico. If this is your first time on this channel, we're here to get you educated on what it's like to be a Santa Fe local, and more importantly, to help you become a local by serving you throughout your entire home buying experience. So make sure that you tap on that subscribe button so that way you're notified every single time that we release a new video. If you're planning on making a move to Santa Fe or anywhere in New Mexico for that matter, make sure you send us a text, give us a call, send us an email, or leave us a comment. However you want to get a hold of us, we're here to serve you in your move to the Santa Fe area.
And today we're coming to you with good news for buyers. The market is shifting. Now, to be clear, the market isn't shifting to a full-on buyer's market. It's going back to where it was before COVID triggered a gold-like rush approach to home buying. You'll remember that a few videos ago we were talking about how people were paying 20% more than the list price and sometimes even higher just to win the house that they had their hearts set on. Things got crazy there for a while. Well, things have finally started to normalize. So in this video, we want to talk about exactly what's going on and what that means for you. Let's get to it.
So first things first, let's talk about what's going on with the market. If you've been keeping up with the news concerning the state of the housing market, you might feel like you have more questions than you have answers, and we're in the same boat. Is this the end of the boom? Is the housing market about to crash, or are prices just going to keep rising? Well, compared to the past 2 years, the housing market is actually cooling down quite a bit, but it's still important to remember that the previous 2 years were record-breaking in almost every single way. Record low mortgage rates and the emergence of millennials in their prime home buying years fueled a surge in housing demand. As a result of years of underbuilding and sellers who waited to put their properties on the market due to COVID, there simply were not enough homes for sale. So due to those two factors, there was record high demand and record low supply, which caused the pandemonium we all just experienced. But the environment those conditions created was not sustainable in the long term. Something had to give eventually, and it finally did. Now, before you get too excited, don't misunderstand what we're saying here. The most recent numbers don't indicate a crash or a correction, but rather the beginning of a return to the market's pre-pandemic speed. Basically, things are coming back down to earth. The market is not crashing, it is normalizing, and it's important to know that it's still technically a seller's market. So no, you can't go offering $100,000 below list price and expect to get a response. You just don't have to sell a kidney to buy a house anymore. So that's like really good news for people who are fond of their kidneys.
So what is causing the market to come back down to earth? Well, let's start with interest rates. Due to a lack of inventory and higher credit standards, 30-year fixed rate mortgage interest rates hovered at a historic low from 2013 to 2021 before beginning to rise now in 2022. During the past 2 years with COVID, we were below a 3% interest rate, which was both incredible and unsustainable for the economy. That rate has nearly doubled this year as the feds are trying to bring some balance to our very delicate economic situation. Now, we could talk about inflation and gas and milk prices and all of that, but this is a video about housing, so we'll just focus on that for now. If you're in the housing market, you need to keep up with rising mortgage rates because they have a direct impact on your buying power. See, the cost of a property, it rises as interest rates rise, which ultimately reduces the number of people trying to buy in a certain price range. Because people that qualified for $400,000 at the beginning of this year might now only qualify for $350,000. On a $400,000 home with a 30-year fixed mortgage, a buyer's monthly payment would be right around $1,900 with a 4% interest rate. That same mortgage payment would jump to around $2,100 with a 5% interest rate. So every percentage point is right around a $200 a month difference. So as mortgage rates rise, it becomes more difficult for home buyers to finance a home. It's just how it works. This means, though, that there are now fewer offers per house, which results in fewer situations where people are offering high amounts over the list price and waiving all their contingencies. Now, there's no need to be alarmed about purchasing a property at a time when interest rates are on the rise. 5 to 6%, that rate is still pretty low by historical standards. See, for the first time since 2009, the yearly average for 30-year fixed mortgage rates was below 5%. Mortgage rates peaked in 2006 at 6.41%, just as the Great Recession was getting underway. 10 years earlier, in 1996, it was right around 7.8, and 10 years earlier than that, it was at about 10.1. The bottom line is this: interest rates remaining near historic lows is good for buyers still today. In today's market, really does reflect some of the cheapest money that a home buyer has access to.
Next, let's talk about inventory. For the past few years, home buyers have had a hard time getting into the housing market because there just weren't enough houses for sale. In addition, home prices were rising across the country. There's been a severe shortage of available properties for sale. However, recent data suggests that this is beginning to change. According to Realtor.com, the supply of available houses is expected to rise in the coming weeks and months. So to be clear, there is still a significant lack of the number of homes on the market. Buyers have 67% fewer properties to choose from in comparison to pre-pandemic levels. However, the year-over-year lack in housing inventory this April was less than in previous months. So inventory decreased by 13% in March from the same month a year earlier, but there was only a 3% decrease during the final week of April from the same time the year before. This means the trend is shifting. More homes are coming to the market than ever before. For home buyers, this is a really good thing. First and foremost, the demand-supply gap will be narrowed as more homes are being sold and more new homes are being built. More houses for sale means fewer of the bidding wars that have been driving prices to the crazy amounts we've been seeing. In addition to this, an increase in housing supply should mean more options and less compromise for buyers. We do expect to see an increase in the number of homes for sale during the summer and fall markets. That said, property values are unlikely to plummet as a result of this because, again, we would need a 67% increase in available homes, which is just not going to happen. This is why experts don't expect housing prices to drop. We are still expecting a healthy rise in equity for the foreseeable future, which again is a good news for buyers because it means your investment has room to bring you a solid return after you purchase.
Everything we've been talking about today boils down to this. Point number 4. There's less competition in the buyer arena than there was a few months ago. Again, do not misunderstand this point. There are still plenty of buyers and not enough houses. It just means that instead of sellers having over a dozen offers to pick from, they may now only have 1 to 3 offers in a week. Just because the competition is less doesn't mean you shouldn't bring your best to the table. You still should. We have watched clients insist on submitting lowball offers because they were certain the market had shifted in their favor and they got beat and they lost out on the house. So don't make that mistake. If you want the home, you still need to submit a strong offer. If the house has been sitting on the market for 2 or more weeks, then yes, we can strategize together on submitting an under list price offer. But quality homes that last 2 weeks or more are still rare birds to find. The benefit that buyers have working for them is the fact they aren't going up against 15 other buyers, 5 of whom are paying cash and waiving every contingency in the book. And that is amazing news. We are back to pre-pandemic market, which was still competitive, just not as crazy. So give us a call, shoot us a text or an email, and comment down below. We've helped over 50 families this past year make excellent moves during the craziest market we've ever seen. And we're ready to help you win in today's market, and we'll be ready to help you in tomorrow's market as well.
Thank you all for watching, and again, if you're planning on making a move to Santa Fe or anywhere in New Mexico for that matter, make sure you give us a call, shoot us a text or an email, or leave us a comment down below. However you want to get a hold of us, we're here to serve you in your move to the Santa Fe area. Let us be your guide.